Okay, welcome to another series in our grants and loans seminar. This one is Introduction to Lending and overview of Small Business Association loan programs. And we're going to focus on microloans. And today our focus will be on microloans, and we're going to have technical information here. So feel free to put questions in the chat if you have them before applying for a loan. So we're going to talk about just the beginnings of lending. First thing before you apply for a loan, evaluate your financial situation. You need to know how much can you invest in your business. How much do you want to borrow and what do you want to borrow it for? And evaluate your cash flow to make sure you can make a loan payment if you get the loan. So we will go through these slides, and you will also get the deck in about a week, and you'll be able to click the links in it that'll give you more information about a lot of the topics. So the 5 C's of credit. You've probably heard this before if you've ever had a loan. But this is the sort of thing you need to kind of keep polished up when you're looking for any sort of funding. So character is the first C. These are the things lenders are going to pay particular attention to when you're asking for funding from them. So do you have the proper experience and skills needed to run a business? Hopefully, if you've started a business, then you already know that about yourself. There are certainly people, and I'm one of them, that should not be in business for myself. I am just not that organized. I don't have that big of a worldview, but lots of people certainly do. Capacity. Does your business have enough cash flow to pay the loan payment? Capital. What's your business's net worth or your personal? Collateral. What assets? These are
the formula of this letter. Well, what's wrong with it? Look, put it over to bar. It's just off.
The collateral, your house, other real estate you can use to get funding against, and the conditions. What are the state of the economy? So these are the things just to keep an eye on for when you are looking for funding of any sort, but especially a loan. So when you work with a lender, what are they going to do? They'll want to review your business plan. They'll want to check your financial projections. They may require 30% of the project cost in equity that you have, you're personally. They may require a personal guarantee for the loan. They may look at business projections for startups, like other businesses in the region. If you are opening a restaurant, they may look at other restaurants and how they've performed in your area. And they may want to obtain collateral, for instance, against your building. This little link here that you'll get when you get the deck, it says Source Funding Your Business in North Carolina. This is a booklet that is really great. It has lots of information just to help you get started. So conventional bank loans versus small business administration loans. Most of us have a good idea of what a conventional bank loan is. That's where you go into your bank, where you keep your accounts, and they show you what loans they have, and you fill out an application, and they give you some money, and you pay it back in some amount of time. They may have limits, for instance, minimum credit score of 580. Some banks may require higher. Of course, the interest can go down as your score goes up, but they will require certainly minimums there. They have terms anywhere from they have terms usually about, what is it? I think 10 years. Most business loans are a 10-year term. And when you're looking at these small business administration loans, which if you're not familiar with them, that's what we're going to talk about today, there may be a little more room for interpretation. They may be able to get you a longer term. They may be able to get you better rates. When you see here, it says time to fund. The reason you'll see that the SBA loans are a little longer is because they're evaluating more than just what's your credit limit, how many assets do you have, how long have you been in business. They're evaluating more about you, about your business, about your prospects. They're taking into account many other things. So it does take a little longer to get that loan, but they also offer a lot of resources in that time. And for the SBA loans, you can be a startup. Usually a bank will require you to have been in business successfully for some amount of time. Of course, that varies by lender. What is an SBA loan? So I hope all of you are familiar with your Small Business Administration, your Small Business Center in your area. These are the small business centers that are in your community colleges. And every county has a small business center, I believe, in North Carolina. And they offer free help to a business, any level, a startup business. If you just are looking to start a business, if you're already starting and are having issues, they will help you along the way. They are able to partner with organizations who can get funding. And because they have a personal relationship with you, then they usually can get you better rates. They know you. They're not like a bank that's just going on strictly the numbers that they're seeing from you. So there are several types of SBA loans, 7A loans, and I believe we're going to have another seminar that's going to go into the 7A and the 504 loans. But the 7A gives you access to working capital to cover business expenses. 504 are long-term fixed rate loans for expansion of your business. And microloans, which is we're going to talk about today, they're backed by the Small Business Administration. They range from $10,000 to $50,000, so they're microloans. And they are designed for small businesses, startups, borrowers with limited capital or sales, and can be used by companies that need a small financial boost. So they have a little bit more leeway in their lending, which is a very good thing. And it's why we're talking about them. The key aspects of a small business administration loan. So they may be able to give you longer loan terms. A bank can possibly normally give about 10 years for your loan, but the SBA has some for real estate that go up to 25 years. So you're able to get maybe longer terms. So you have a lower amount to pay every month. Interest rate limits. There is a cap, a government cap on the interest rate. So that's good. Banks don't normally have a cap. And longer wait times, as we discussed before, it's because they're looking at more of you than just the numbers on a piece of paper. So the longer wait times can be frustrating, but it's really good for you in the end. So the takeaways about a small business administration loan versus the conventional loan is the small business association loans are backed by the government, which means if anything happens to them, the SBA is taking on a lot of the risk, which is also why they work so closely with you to make sure your business succeeds. They have skin in the game. They do not want you to fail, and they have every reason to help you succeed. You will see that the SBA loans may ask a little bit more from you, but they also offer more to you. We'll talk a little bit about that. Conventional bank loans issued by banks or credit unions. The difference with these are You have to be in good standing credit wise. You have to have good financials. You have to have been in business some amount of time. They just have to be able to see you can already succeed before they will offer you funding. Okay. So the Small Business Administration, we've talked about that. I hope you've all been in touch with yours. The microloan program that we're going to focus on today, this provides up to $50,000, as we have said. This helps small businesses and some not-for-profit childcare centers start up and expand. And they don't loan the money directly. It comes through intermediary lenders, and we will talk about that as well. So just like other loans, each lender will have its own specific requirements, but they're usually a little more favorable than a conventional loan. You must have a positive cash flow, so you can't already be in over your head. This is to help you grow, expand, and they would require some collateral, maybe not as much as a conventional loan. So you can use the microloan proceeds for just about anything except paying existing debts or to purchase real property. So capital, inventory, supplies, fixtures, machinery, rebuild, reopen, repair, all those things we need. Oops, wrong button. So is a microloan right for your business? These are personal decisions. This is just information to kind of help you know if this is something for you to pursue. So they're easier to qualify for. You don't have to have a business history, which we've mentioned before. If you apply for a traditional SBA loan, the application and funding process can take months to complete. But with a microloan, you may get it a little faster as opposed to the other SBA funding. Low interest rates. They have good interest rates compared to conventional loans, and they will vary, usually between 6 and 9. I've seen conventional, I'm going to say small loans at banks now for anywhere from 10 to 15, 16. And they have flexible terms. So they have a repayment term up to 7 years. And remember, you can only get $50,000 with this type of loan, but it makes the monthly payment a little more affordable because you can have a little longer term. So the cons of a microloan, they are only up to $50,000, which some businesses certainly would need much more than that. And they have restrictions that we talked about. You can't use it to pay debt that you already have or to purchase property, buildings. But they're very good for startup businesses. So when you're looking to prepare your small business loan request, have these things at the ready. And this is actually for any loan, but your personal and business tax returns for several years, personal financial statement, LLC or corporation papers, identification, debt schedule. These are things that not all businesses are going to have right up front. But I will say this about the Small Business Administration. If you are at the Small Business Administration and you're looking to possibly get a microloan, they have services. I say they're free. They're free, but they're included in the taxes you pay because they are a government-funded program. So they have services that'll help you write your business plan. They'll teach you how to use QuickBooks. They'll help you learn about financial statements. They will sit with you and help you develop your idea. If you have an idea that's not quite a business, but it's an idea, these folks are the place to go. They will help you with financial statements, business plans. They'll help you develop these things. So you're not just walking into a bank and saying, I'd like to borrow money, and they said, oh, well, I need all these documents. I don't have them right now. Okay, well, come back when you do. The SBA has a lot more resources to help you start collecting these papers. Okay, so like we said, you do not get money from the SBA. You get it through one of these lenders. So Ascendus is for anywhere in North Carolina. They're one of the lenders. Mountain BizWorks is the western part of the state. Carolina Community Impact is for the eastern part of the state. And your Small Business Administration will help you and tell you which lender to go with. So Carolina Community Impact, most of who we work with in Uplift is in Eastern North Carolina. We hopefully will expand into the West next year, but right now we're mostly in the Eastern. So Carolina Community Impact would be the funder for many of the Eastern small business loans. They have small business lending, coaching. You'll see it says business coaching and advising. These are things you're not going to get from a commercial bank usually. I'm not saying they don't have those services, but certainly not on the level a small business association does, because that's what they do every day. So the microloan program through Carolina Community Impact is called Business Loan. And when you get the deck, you'll be able to click this business loan here. It'll take you to the page that shows you more about it, right to the application. So working with Carolina Community Impact is not just getting a business loan like we talked about with the SBA. They offer financial advice. They will help you after the loan is closed. They'll continue to be your partner. And here are some resources that are really cool. They're also at the end in a resource page. We've got business plan template. If you do not have a business plan, I would recommend going to all these things and just looking at it on your own. But of course, they will help you through it as well. So Carolina Community Impact doesn't only offer microloans. They have other programs, and this is one, the Kiva Hub. If you haven't looked at this, it is really neat. And we have the link here for you to look at Kiva. They are up to $20,000 no interest loans because they are crowdsourced. So you put your information about your business out there, kind of like Kickstarter, sort of like that. You put your information out there, and the people who use the platform, the crowdsource, the public, can put $25 toward your project, $1,000 toward your project. And then those get paid back. The people who are using the app get their money back and then can put it back into another business. So that money gets recycled to help everybody. So that'll be a cool site. Hope you get to at least see that. They have other loans at Carolina Community Impact besides the Kiva, besides the microloan. We won't spend much time on these because we're trying to talk about microloans. But they have an employee loan program, which I think is amazing. They're low interest loans for employees of small businesses, which we all are, that have stress, like you have a car, your car's broken and you have to have the car to go to your job, to go to your business. So you can get up to $1,000 from there. You repay over 12 months. Your business, if your employee is using this, your business has to be registered through here, but that's also no cost. So the employee pays back to Carolina Community Impact. There's no cost to the business, but your employee was able to get a little financing so they don't have to ask for money from you, payroll advance. So that's pretty cool. Okay, so Mountain BizWorks. We won't go into that too deeply because they are for the western part of the state, very similar to Carolina Community Impact. They also offer services, resources. They will help connect you with any sort of resource you need. They have loans from $1,000 to $500,000 in their resources. Their microloan program is called High Gear Loan. And in this particular loan, you'll see streamlined online application process, which if you get the deck and click this, you'll be able to go to the information. No credit score minimum, loan decisions within 3 business days, transparent terms, no hidden fees, no prepay penalty, and you can have reduced collateral and financial documentation to get these loans. They provide working capital, equipment, debt consolidation, leasehold improvements through their microloan program, 3-year term, up to $20,000, current rate, 8.75 and a one-time 2% fee. So that's their microloan program. They have other funds and Mountain Biz Works that are not microloan programs, but other alternative funding programs. They have a multicultural catalyst fund that is for people of color and immigrants to get their businesses off the ground. So Ascendus is the third lender that the Small Business Association in North Carolina would use. So Ascendus is more flexible than some. If you see their mission here, it says they empower low to moderate income business owners with access to capital and financial education. So they also are a resource as much as they are a lender. They work hands-on. You'll see this with all the Small Business Association partners. They have programs up to $250,000. Their microloan program, however, is a cap of $50,000. I believe that's a cap that it's a microloan under $50,000. So they have the small business term microloan. Again, you'll be able to click here and see if that loan is something that would be of interest to you. Their current rates vary from 6 to 9.99%. They do have a requirement of 5.75 credit score or higher, and you can also get a cosigner, so that can be helpful to lower interest rates if you have a cosigner with better credit. They help with very new credit. Again, counseling, they'll learn who you are, and they'll be able to offer loans for people that may not necessarily qualify for, or businesses that don't qualify for conventional loans. You have to have less than $3,000 in unpaid past due debt. If you've had a bankruptcy, it must be discharged for more than a year, and foreclosures more than 2 years. So this can be used for working capital, purchase inventory, equipment, training, promotions, advertising, retire existing business debt, or for the purchase of an existing business. Here are some of the other Ascendus funding programs that are not microloans, but still available to small businesses. They have an Entrepreneurs of Color Fund, and this you'll see is for equipment, leasehold improvements, or working capital up to $250,000. So this is not a microloan. It's just something that's available. 9.99 over 72 months. The business has to be 51% owned by entrepreneurs of color. Has to be at least in operation for 2 years. Less than $5 million in annual revenue. Must be a permanent resident or U.S. citizen, and a 600 FICO score. So this does have a little bit higher qualifications, but it's also a lot more money. They have a child care fast track business loan, and that is specifically for child care centers. So this last page are the resources that are just good to go through and learn from. It's got score.org, which is has a whole business toolkit that is really nice. The Eastern NC Entrepreneurial Promise. This is a virtual incubator where you can sign up to for underserved counties in Eastern NC, which is mostly what Uplift services as well. You can learn about all the business things that you want to learn from this entrepreneurial promise, and you can also learn from other people in your position. So that's really cool. Here are some other resources. The Carolina Resources business plan template, startup financial projections. These are just templates that are good for you to have and to learn from.